All right, who is ready for the strategy after party? I think you can do better than that, right? I want you guys to give the warmest welcome to our next speaker because he's ready, more ready than all of us for the strategy after party. Patrick Lowry. He is the CEO of Samara Asset Group, a deep tech-powered alternative asset manager with a hyper focus on alpha-generating strategies and Bitcoin. They leverage their robust balance sheet to seed emerging asset managers and back the world's best builders in Bitcoin. Welcome, Patrick. Last speaker.
Well, good evening, everybody. And believe me when I say I know you all probably want this to be made quick to get to the happy hour so you don't have to listen to me talk anymore. Yeah, exactly like Natalie said. I'm right there with you. I'm ready to get going to the happy hour myself. So my name is Patrick Lowry. I am the CEO of Samara Asset Group. Samara is a publicly traded global holding company based out of Europe. We have actually, since 2018, the company's inception, had Bitcoin as our primary treasury reserve asset on our balance sheet. And what we aim to do is democratize and decentralize opportunities for investors to get exposure to some of the most innovative and emerging technology around various asset classes. And largely we do this not because we're a Bitcoin treasury company, like you've heard a lot of my colleagues talk about what their strategies are today, but rather we are a company that has an operable business model investing in funds and investing in managers that merely leverages Bitcoin as its primary treasury reserve asset. And I think there is a unique distinction here, because even though we did raise 21 million in a Bitcoin bond at the end of last year, the first ever to be done so in Europe, again, leveraging Michael Saylor's playbook, our core business model is not just buying and stacking Bitcoin for the sake of stacking Bitcoin, but acquiring Bitcoin to use to deploy to the funds that we have on our platform. And the reason we do this is because, frankly, up until Bitcoin, the number one asset class that has performed in the modern economy, it's not been equities, it's not been the S&P 500. And while Bitcoin has turned this on its head for the last 15 years or so, ever since Bitcoin's conception, the number one asset class from a pure ROI perspective has been venture, hedge, and private equity funds. Now, the problem is most investors cannot access this asset class. And why is that? Well, it's because of qualified and accredited investor laws. So for instance, in most jurisdictions, especially in the West, your government effectively either tells you you're too stupid to understand the risk you're taking on by investing in venture or hedge funds, or frankly, they're telling you you're too poor to potentially suffer the loss of investing in venture and hedge funds. And I fundamentally disagree with that because I'm a Bitcoiner. So this is why our core business model is investing in funds. And on the Samara Asset Group balance sheet, we have exposure to over 20 venture, hedge, and private equity funds, which gives us indirect exposure to over 700 portfolio companies. This makes up about 60 to 65% of our balance sheet, whereas the 540 Bitcoin that we sit on makes up roughly about 20 to 25% of our balance sheet, depending on wherever Bitcoin happens to be that day. And this is where our business model is unique relative to my counterparts, because while I love the concept of BTC yield, and I think it's wonderful to see these groups out there acquiring more Bitcoin per share for their balance sheet, I don't necessarily just believe in sitting on Bitcoin for the sake of sitting on Bitcoin. The reason for that is I think Bitcoin not as an investment, but I think of Bitcoin as money. And if I'm the CEO of a publicly traded company, if I'm just sitting on Bitcoin, if I'm being honest, that's actually money that I believe I should be distributing back to the shareholders. Because what do you do if you're the CEO of a company that cannot exceed the weighted average cost of capital for the operations of that company? And what I mean by weighted average cost of capital is the hurdle rate the internal CEO has to exceed to actually make a return on investment for their shareholders. Well, if the internal rate of return that you have to actually exceed is Bitcoin, that means, well, you should be distributing that Bitcoin back to your shareholders, because I personally and fundamentally believe the best way to hold Bitcoin and get direct exposure to Bitcoin is not investing just in companies that have exposure to Bitcoin, but by having it in a hardware cold storage wallet and running your own node to validate any transaction you have. So if you want pure exposure to Bitcoin, avoid Bitcoin companies. But If you want companies that have come up with creative and unique ways to raise capital to acquire more Bitcoin, such as you've heard a lot of my colleagues talk about, there's significant value in that. And if you also want to look at companies that leverage Bitcoin from an operable perspective, leveraging it as their primary treasury reserve asset to deploy to the businesses that they're either investing in or are building, I highly encourage you to look at these companies as well. And this is where the Samara business model is unique. But why is that the case? Well, because whenever we subscribe to a venture capital fund or a private equity fund, let's just hypothetically say I commit $5 million from our balance sheet to a manager that I believe will outperform Bitcoin over the life of the tenor of that fund. Well, I don't invest that $5 million on day one. I can't. The capital is called over the investment period of the fund. And usually this is a 3 to 5 year investment period. Sometimes it can be up to 7 years. And this is done through what's called a capital call, where the manager will let me know over the course of many months when I need to give them the money that I committed to their fund so they can finance the investments that they discover over the life of that fund. Well, that means I need to keep back that $5 million in cash, and maybe $1 million is invested on day one, who knows? But that means there's $4 million that I need to make sure that I have access to over a 3-5 year period to be able to fulfill the commitment I made to that manager. Well, I don't want to keep that money in dollars. The dollar's worthless, and it's going to be zero in the very near future. I also don't want to use treasury bills, because all I'm doing with treasury bills is trying to exceed the yield, or rather use yield from treasury bills or something like that to cover the cost of inflation, because my dollars are going to go down in value over a period of time. But there's a wonderful money out there. There's the world's most perfect form of money out there called Bitcoin that over a 3 to 5 year period continues to appreciate in purchasing power. So whenever I commit to that fund, that $5 million, okay, maybe $1 million is invested on day one, but my treasury then becomes in Bitcoin. And that Bitcoin continues to appreciate in purchasing power over the investment period life of that fund, such that the $4 million that I might have to distribute to that fund over time, I might only liquidate a small portion of Bitcoin relative to what that Bitcoin is worth today, because we know what happens to Bitcoin every 3 to 5 years. You have the halving effect on Bitcoin's price relative to fiat currency. You have continued mainstream adoption. You have continued institutional adoption. So I effectively, in pure Bitcoin terms, am investing in substantially more funds on behalf of my shareholders by having all of my treasury reserve assets in Bitcoin. And I know that this works because just yesterday, Samara, we published for the very first time the world's first Bitcoin CPI, the world's first Bitcoin Consumer Price Index. Because frankly, I've always felt that looking at Bitcoin in dollar terms and considering Bitcoin's success as a currency because it's appreciated in value relative to fiat dollars, it's very low IQ thinking. I think of Bitcoin not as an investment, I think of Bitcoin as money. And I think of Bitcoin as the world's most perfect money, which is why we created this BTC-CPI, which prices the baskets of goods that are used for all the generic CPI issuances out of Europe as well as the United States, and definitively shows how Bitcoin, over just about any period of time, increases in purchasing power relative to baskets of goods and services, which is the exact opposite effect that the dollar has when it looks at its Bitcoin, or it looks at its goods and services. And that's obviously because the dollar is being inflated to zero, potentially on purpose by our government. But on top of using Bitcoin as our treasury reserve strategy, I don't believe in just leaving Bitcoin in a custodian account or letting it sit there and just accrue value relative to fiat. Again, Bitcoin to me is not an investment. Bitcoin is money. And money should be put to work on behalf of your shareholders. So that's why we'd use two predominant things at Samara Asset Group with the Bitcoin we have on the balance sheet. Number one, we use a portion of our Bitcoin as collateral with banking partners to extend our credit facilities. Now, of course, a lot of people don't trust companies that will do this. There's the notorious deleveraging effect that happened at 3AC and elsewhere. But frankly, these were companies that were just severely mismanaged. They were doing the bullshit grayscale trade and over-leveraged themselves, and they lost everything. But if you're familiar With risk management, if you're familiar how to manage risk of a credit facility, Bitcoin truly is the best collateral on earth. And if you manage yourself well, you will never ever have to sell Bitcoin, and the additional credit that Bitcoin will offer to you with your banking partners will allow you to not only finance operations, but new investment opportunities. Secondly, we put our Bitcoin to work earning Bitcoin on Bitcoin. And the way that we do this is we set up a subsidiary underneath Samara Asset Group called Samara Alpha. Now, what Samara Alpha does is it's a hedge fund group based out of New York that has a market-neutral Bitcoin-denominated fund. Well, what does that mean? The fund being denominated in Bitcoin means that it is subscribed to in Bitcoin, it is redeemed in Bitcoin, all of its expenses, the management fees, etc., are incurred in Bitcoin. All of the gains the fund makes are in Bitcoin. So it is Bitcoin. Nothing is touching the dollar. Nothing is denominated in dollars. This is a Bitcoin fund capturing 100% of the beta of Bitcoin relative to fiat currency. But the market neutral element of this fund earns about 12% per year Bitcoin on Bitcoin in pure alpha while still removing market risk of the Bitcoin itself. Frankly, these are returns that would make Bernie Madoff cry, and he actually had to pretend that he was making. Now, this is where some people believe, well, I'm the Bitcoiner. I don't want to give my Bitcoin to anybody to manage and allow them to potentially steal the Bitcoin, and sure, I get that. For us, I believe in putting Bitcoin to work, and these are the two ways that we do it at Samara Asset Group. And if you're the CEO of a public company or you're a CEO of a private company thinking about Bitcoin on your balance sheet, I encourage you, while yes, consider the business models and the convertible debt issuances that a lot of the companies you've heard about today are doing. They're wonderful business models and they work, clearly. But if you're more of a traditionalist like me and wants to use Bitcoin and put it to work for the betterment of your shareholders, think about different ways and creative ways that you can use that Bitcoin on your balance sheet to drive value to your shareholders, similar to what we do. On that note, thank you everybody for listening. I think I'm about ready for a drink, and I hope you all are as well.